Welcome to Tax Pundit. Today we are going to discuss a significant legal development in the case of Rohit Real Estates, P. Limited versus Assistant Commissioner of Income Tax. Rohit Real Estates Private Limited filed its return for assessment year 2017-18 declaring total income of Rs 8 crore, 22,96,116. The case was selected for limited scrutiny to examine expenses incurred for earning exempt income. The assessee earned dividend income of Rs 31,070 and claimed no expenditure was incurred for earning it. The AO found the assessee's explanation unsatisfactory and invoked Section 14A, 2, read with Rule 8D, 2E. He computed a disallowance of Rs 2,54,373 and assessed total income at Rs 8 crore, 25,50,493. The assessee had made a suo motu disallowance of only Rs 3,085. Aggrieved, the assessee appealed to the Commissioner of Income Tax, Appeals, NFAC, Delhi, who sustained the addition and dismissed the appeal. The assessee then approached the ITAT Lucknow Bench. The assessee raised two primary contentions. A. The AO failed to record proper satisfaction before invoking Section 14A, and B. The disallowance under Rule 8D, 2E, cannot exceed the exempt income of Rs 31,070. The assessee relied on several judicial precedents including PC, IT vs JSW Energy Limited and Unilever Industries. The tribunal rejected the first contention. It observed that the AO had recorded satisfaction, noting that the suo motu disallowance of Rs 3,085 was not commensurate with the volume of investments. Thus, the procedural requirement of recording satisfaction was met. On the quantum issue, the tribunal noted that the doctor conceded that judicial pronouncements were against the revenue. Following Unilever Industries Private Limited vs DC, IT and M.S., Nirvade Traders, P. Limited vs DY. CIT, the tribunal held that disallowance under Rule 8D, 2E, cannot exceed the exempt income earned. The assessee also challenged the retrospective application of the explanation below Section 14A inserted by Finance Act, 2022. However, the tribunal did not delve into this issue as the primary relief was granted on the quantum point. The decision implies binding precedents on quantum limitation prevail. The ITAT partly allowed the appeal, directing the AO to restrict the disallowance under Section 14A read with Rule 8D to the extent of the exempt income earned, i.e., Rs 31,070. The order was pronounced on 6 May 2026. Question: What was the core issue in the Rohit Real Estates case? Answer: The core issue was whether the disallowance under Section 14A read with Rule 8D could exceed the exempt income earned by the assessee, which was Rs 31,070 in this case. Question: Did the ITAT uphold the assessing office's satisfaction to invoke Section 14A? Answer: Yes, the ITAT found that the AO had duly recorded satisfaction, noting that the suo motu disallowance of Rs 3,085 was not commensurate with the volume of investments. Question: What was the final direction given by the ITAT? Answer: The ITAT directed the AO to restrict the disallowance to the exempt income of Rs 31,070, following judicial precedents that disallowance under Rule 8D, 2E, cannot exceed the exempt income. Question: Which judicial precedents did the ITAT rely on? Answer: The ITAT relied on Unilever Industries Private Limited vs DC, IT 2024-158 Taxman.com 599, Mumtrib, and M.S., Nirvade Traders, P. Limited vs DY. CIT. IT Appeal No. 149 of 2017, which held that disallowance under Rule 8D, 2E, should not exceed exempt income. Question: Did the ITAT address the retrospective effect of the explanation to Section 14A? Answer: The ITAT did not explicitly rule on this issue, as the relief was granted on the quantum point. However, the decision implies that binding precedents on quantum limitation prevail. Question: what is the significance of this ruling for taxpayers? Answer: this ruling reinforces that while the revenue can invoke Section 14A, the disallowance must be reasonable and cannot exceed the exempt income earned, providing clarity and protection to taxpayers. Thanks for watching this video. You can download the full analysis, case law, and case digest PDF from our website, taxpundit.org. Feel free to write to us or message us on WhatsApp at +91 93263 06668 for any assistance. Subscribe for more legal updates.